Hello, everybody. I'm Patti Patane. Intelligent conversation. One of my most favorite subjects to talk about happens to be long-term care insurance. Now, before, when I did a program with Bill Robinson from Palm Canyon Insurance, I put it all in one along with our little discussion about Obamacare and about Medicare, and it didn't fit. So this time we've divided the programming up, and we have one program which you can go to pattipatane.com and see anytime, or on television that you may be watching now. And you can also go to television and to pattipatane.com, and you can watch this program on long-term care insurance. Now, why am I devoting a whole half hour with Bill to long-term care insurance? Because I had a personal experience 20 plus, make that 30 plus years ago, when my mother had a stroke. I was living on the East Coast. I was called home, and my life as I knew it was over. I became my mother's mother. I ended up changing the diapers of an adult. Now, I want to tell you, no matter how much you love your mom, your dad, how much you love your spouse, how much you love your partner, how much you love whatever that answer is, I'm going to tell you right now, when you change an adult diaper, it will change the relationship you have had with that loved one. It's not a mean thing. It's not any of those things. It just, I didn't want to be my mom's mom. I wanted to be her daughter. I wanted to be my mommy. I mean, that lasts throughout your lifetime. And that just wasn't the case. So as a result of the experience I had taking care of my mother, and eventually having to find a place after 7 years in her own house with private care, got very expensive. I had to find a nursing home to put her in. And that again was a challenge. So long-term care insurance became a real passion of mine very early on. I was 45 years old when I started doing a new program, radio and television. And at the time there was really only one company. It was only about 8 or 10 years old, the policy for long-term care insurance at the time. This was in the early 90s. Because of my personal experience, I signed up for, paid for, and have for the last 28 years a long-term care insurance policy. I want to tell you, it is the smartest and probably the only really bright financial decision I have ever made. I signed up at the age of 45, and my premium the first year, and for many years thereafter, was $202 a year. Yes. $202 a year for a long-term care policy. This was 25 plus years ago. Things have changed. However, my payout at the time, had I used it any time along the line there, would have been like $100 a day. Well, that doesn't get you hardly anything in a nursing home or in a luxury assisted living. So today, 25 plus years later, 20 years later, don't date yourself, Patty, my policy now costs me $505 a year. That's my premium. And I get a total, as of today, of around $6,000 a month. Every single month from this long-term care policy, should I need to go into a assisted living where I could no longer take care of myself, or if I needed real nursing care, I'm covered. Doesn't affect my Medicare, doesn't affect my Medi-Cal, or my Medicare, nor my Social Security. That's all protected. It's in addition to this policy. So because I am just fanatical about this, I also have a home care payment in here. I get $100 a day for somebody to come in and take care of me if I'm not in worse off shape to have to go to assisted living or to a nursing home. So, gee, Bill, I did a smart thing, didn't I?
You did, and if I could sell a policy like that today for those premiums, I'd have them lined up outside my door. But
okay. Now there's a reality check, folks. Okay? There's a little reality check, and that's why Bill is here. Someone who, if I was 45 years old today, and I'm really glad I'm not, folks, because I don't want to make all those mistakes over again. If your current age, and please, please, please pay attention. If you're 40, it's even better. But let's start with 45 years old, okay? I will emphasize you do not want a friend, a loved one, a child changing your diapers. You don't want to go there. So let's make that a reality check and let's go from here. Current age. Someone comes to you and they say, well, I don't want somebody changing my diapers, or better yet, my parents don't want to do this, but I don't want to be changing their diapers. I love them. I want them to be my parents, so I'll pay for the policy. Okay? All right, so here we go. Let's first start with 45 years of age, and we're going to go through all the way up to what it'll cost if you wait until you're 65. You really don't want to do that, but you have the option to do so. Okay, a 45-year-old comes to you today and says, I want long-term care. What do I get, and what's it going to cost me?
Well, it is a Chinese menu, and we can add a lot of things. I put together a basic plan with not too many bells and whistles, but important inflation protection, 3% simple interest, and benefit for 3 years, pays $200 a day. That creates a pool of money for the policy's 3 years of $216,000.
So that's the amount that I would have to draw from. So here, I sign up, you sign me up, I get approved, and I'm 45 years old, and you sign me up today. A week later, I have a stroke. Is this good?
Good for $6,000 a month for up to 3 years. But it's really, time frame is not limited by time, it's limited by when the pool of money is exhausted.
Okay.
Knowing they won't pay more than $6,000 per month.
For 3 years.
For as long as it takes to exhaust 206.
Okay.
You might have some days or weeks months you don't consume $6,000
Right.
of the benefits.
Let's just say the stroke enabled you to not be able to take care of yourself at home, but you could go over and live at Windsor Court, the luxury assisted living, where you can live for like $2,800 a month all the way up to, I think it's $4,200 for a luxury suite or something. So basically $6,000 a month is going to take pretty good care of you, but if you don't need to use that $6,000 a month,
it'll pay for another year or two.
It'll pay for another year or two. So worst case scenario, at 45 years old, the amount of your premium, it's not going to be $200 a year. It's not going to be what I pay even today at over 65. It's not going to be $500 a year. It is going to be $2,728 a year. That's still divided by 12. That's a little less than $200 a month, right?
A little over 200.
Is it a little over 200? Worth the investment. Remember, if you're paying for this for your parents or for yourself, just think of changing
It helps
an
to
adult
protect
diaper.
retirement funds from being exhausted. Yes. One of the most horrible things that happens too often is a married couple, one gets sick and ill, the other's in fine health. They end up having long-term care and exhaust most of the retirement funds. They pass away. The survivor's in good health and destitute with no money.
Yes, it happens so often because at 45, you didn't plan ahead. So 45 years old, find $2,728 a year for long-term care insurance, and you will be covered. Now, you keep that up until whatever age you want to draw down on it. You don't need it for 40 years and you're age 85. You're going to have a lot of money to draw down on. You're going to have $500,000 in your little take care of me and change my diaper account.
What started as a $216,000 pool of money will be almost $500,000, and that's not conjecture, that's mathematical certainty.
So here's what happens if you decide to wait, or if you allow a parent or a loved one to decide to wait. No, it's not important. I don't want to, I'm 45, I'm healthy. I don't need this. Okay, so you waited until you were 50. Now, the premium at 45 was $2,728 a year. Well, Bill, this is no big deal, so I wait until I'm 50. It's now $2,866 a year. Big deal. You know? Big deal. I still get the same $6,000 a month. So what's the rush?
You accumulate a little less money by the time you get to the hypothetical ages than you might need benefits, but That 5-year difference doesn't have a huge increase in the rates. But
It does, however, have a little issue if I become sick in the meantime. If I get if I get sick between the ages of 45 and 50 with something that just kind of won't go away, what happens to this policy? Can I still get it?
you might get it at a much higher premium, and you have a good chance of being declined. It's fully medically underwritten.
Let's understand something. You buy insurance before you need it. One more time. You buy insurance before you need it, particularly long-term care insurance. Why? Well, you say, I've got enough money. I don't have to worry about it. My parents have enough money. And what happens to that money, Bill, if parents get sick, or if one parent gets sick and they figure, no problem, we've got plenty?
They'll want to spend that money to take care of the person suffering, but they may spend down most of that money and have not much left if presumably that person with the long-term care health issues ultimately passes away. They may have no medical bills left to pay, but they may not have much money left in assets to live on. And that's that's as tragic almost as losing your loved one.
Mm-hmm. So let's say both your parents are gone and you didn't help them plan ahead for long-term care insurance, and suddenly that inheritance you were thinking about
Isn't there?
gone. Gone. So if you don't do it for them, be selfish. Do it for yourself.
And one thing we should touch on, the federal state government program called Medi-Cal, which already pays a lot of long-term care for people who didn't plan to get the insurance, doesn't cover home health care. It doesn't cover assisted living. It only covers nursing home care in the probably worst condition nursing homes that exist. And when you pass away, the state will come back, and if you have a house or something or assets, they'll liquidate those assets to reimburse them.
That's
but
right.
The worst part is the care in these facilities leaves a whole lot to be desired.
Without insurance, the nice places, the nice ones, where they take very good care of you, like Windsor Court in Palm Springs, they don't take insurance. Because
And-
long-term care insurance is available only if you buy long-term health care. Medicare doesn't pay for this. No way. Does not pay for this. So you can forget about that. So let's...
And by the way, if you have Alzheimer's, at best there's one facility